Our next guest says investors should remain cautious when it comes to the markets. Crossmark Global Investment CIO Bob Dahl joins us now. So Bob, you think what? That it is too rosy of a forecast that you're getting from the market right now?
Yeah, as Bob Pisani accurately presented, the market is priced for near perfection at 20 times, 20 and a half times trailing, 18 and a half times forward. And maybe things will be just fine, but the inverted yield curve, declining money supply, leading economic indicators falling, those things all haunt me when I try to argue the positive case for a soft landing. I think last year's decline was all about valuation compression. And if we're going to get a noticeable decline this year, it's going to come because we have earnings problems, because we have a recession. And I think that probability is still too great to ignore here at 20 times earnings.
So what do you do? What is your advice? To get out of the cyclicals, which have worked a little bit better lately? Get out of tech, which is vulnerable to everything that's happening with the Fed? Which do you do?
Yeah, first of all, you can, as you know, get cash or near cash 4 to 5%. I'd have some money there, Sarah, within equities. I think some broad diversification makes sense. I'm underweight tech. I think some of those names that, as Bob pointed out, have been lagging and struggling. They had a big run earlier this year. I still own some of the HMOs. Technically, they're not doing so well. In financial services, Visa, MasterCard are okay. Lowe's in the consumer space. So it's a name here and a name there. It's not like there are names you can't find, but it's much harder. And I think you have to, in your value stocks, make sure you own ones that are not just cheap, but have some current momentum. And in your growth stocks, I think you can afford to be stingy.
Hey, Bob, I mean, you know, the beat rate on earnings is always fun to play with. 90% for the first week. Obviously, it's a limited sample with only 30 companies, but it's the best week one in almost a decade. I just wonder, you know, whether that gets tossed out or actually starts to get some serious consideration if the trend continues.
If that trend continues, that's for real, Carl. Although if you want me to be the bear for a moment, a lot of companies are saying January was real good, March not so much. So if we're having a trend during the quarter and we project that going forward with some more slowing, you know, maybe it's just a delay of a quarter when earnings begin to disappoint. I still think those disappointments are in front of us.
Bob, want to get your take on the debt ceiling. We're talking about it today. Kevin McCarthy is here at the New York Stock Exchange. You heard the headlines from Bob. They want to introduce a bill in the House to punt it a year into the election year. Not clear whether that could pass. Not clear whether it could pass the Senate. The president doesn't want to go negotiate it. It's going to be tricky, isn't it? So what's the risk for you? How are you talking to your clients about it? Are you worried about it?
A lot of people are asking that question as it relates to a bunch of things, including the dollar. But for the talks themselves, Sarah, you're right. First of all, we do not have a united Republican Party or united Democratic Party. So it's really hard for those leaders to argue for their entire caucus. So I'm with you. This thing should, I hope, does get solved. But it could be the 12th, 13th, 14th hour with a lot of fireworks between now and then.
But are there any moves to make between now and then? Short-term market moves?
It's a macro comment, obviously, and I think having a little powder dry, along with the other reasons I cited, is not the worst thing in the world, should we have some sort of sell-off.
All right, Bob Dahl, thank you very much for your perspective today.